Hello traders, my name is Yaroslav Burchenko. I'm a market analyst at Olymp Trade, and today we are here to talk about the week ahead, what kind of trades are being set up, what's going to happen in terms of geopolitics. We'll look at the economic calendar, and we will pinpoint technical entry points on the graphs themselves. So without further ado, let's get started. So in the US elections, actually let's start with the trades that happened last week. It was kind of a really heavy volatile trading conditions. So our trade on the DAX, on the German index, came out quite poorly. When looking on the daily chart, we saw that the inability to climb higher does not dictate that we will fall lower. And this is a theme that we have, all across the markets. If you're looking at the US markets, we have the similar picture in the S&P 500, in the Dow. So the price that we're trading at right now is very close to all-time highs, but the markets are now pulling back into a period of consolidation. As you guys can see, that the consolidation is quite large, quite severe for most of the markets. Going back to our trade in the DAX, the optimism that is fueled by the coronavirus vaccine, that we have two companies from the United States pushing forward. Pfizer and Moderna both have a working vaccine. These are all expectations. The reality is that we still have to get the vaccine to people. Transportation, logistics, how quickly will it reach Europe? How quickly will it start taking effect in people? How many people will go to get vaccinated? So the forward thinking of the markets, it finishes here. Excuse me, let's go back to the US markets. Right? Our optimism finishes close to all-time highs. The premise for a continuation higher, most investors believe, needs to be fueled by positive numbers. And we have this from the earnings coming out of the United States. They're very good. Earnings this season are very good. The indecision is what's dominant right now in the market. It's very hard to decide on where the markets will grow. But one factor of positivity, one factor of where we're going to go would be the consumer reports coming out of the United States. So let's have a look at the calendar moving forward this week. We can see that on Wednesday will be the most important day in terms of sentiment, in terms of how people are actually spending. So here we have personal income and personal spending, two very important characteristics of consumer-related market data. We have GDP growth, corporate profits. All of these indicators will give us an understanding of, is the US stock market an asset to be traded right now? Is the demand within the country growing? It's the holiday trade that we're looking for. Keep in mind that we are in December, end of the year territory, where holiday spending increases, right? This is a seasonal effect. And the best economic indicator for the United States, which is, a majority consumption, internal consumption market, it is, the economic activity indicator to look for. Any kind of consumer-related sentiment indicators, this will be a very important look for what we can expect in the holiday season to come. Now let's have a look at some other markets that are also showing reversals. So let's quickly have a look at the trade that we're in right now, Apple. So let's drop down to an hourly graph so we can clearly see what's happening. As we can see, the indecision, the inability to move higher, and the fact that we dip down below our 100 EMA, this worries me, and we are going to cancel before, we may open down with the gap. If the opening is bullish and if we go higher, then this will be a great time to, stay in the trade. But again, this is a red flag for us. The close of Friday's trading was very worrisome. Hopefully this is just people closing their positions, but we are looking to get out of the Apple trade if we're going to continue lower. So stay tuned as it opens. For the gold trade, again, this does not instill confidence. This is a terrible sign at the end of the day on Friday, right? We are below the bearish trend line and still below there. So this is another trade that is looking just ripped up, the trade surplus that I had. So right now it's not that bad, right? We're not too low, but the market action, we have 12,000 grand on the, or 12 grand on the line. This is a trade that really worries me and hurts me. So I'm looking to get out as soon as I see additional bearish pressure. I don't want to be in that trade. I can use that 12 grand, to make up some losses. So those were the trades for last week. Same thing with the Facebook market. It just, as soon as it opened, we had some positivity that made me want to stay in the trade, the optimism after the presidential elections, and then a slow decline. So that triggered the stop loss as well. Then the few. So carry trade currencies, guys. Remember the dynamic was last year and a year before that. Dynamic was dollar, Aussie dollar. Right now we're looking at the euro dollars. We're looking at euro and Japanese yen as a carry trade opportunity. Now, obviously, in the exotic currencies, there are a few more opportunities. So something like the Turkish lira, Russian ruble. But because they don't offer the best return on your investment, let's have a look at some other trading opportunities besides the exotics and carry trade. So there's a big shift happening right now in the Aussie dollar. Actually, it's one of those, if the consumer sentiment in the United States on Wednesday comes out much more positive than expected, you can expect the US dollar to rise. So we are going to see a shift in the Aussie dollar, also the dollar yen I was talking about. So here we have the dollar yen. Also an opportune moment to have a turnaround. The indecision to continue lower in one direction makes this more of a mean reversion market to trade. So anytime your strategy returns you back to the mean, which in our case I guess is the Bollinger 20, that's a good strategy in the indecisive markets that we're seeing right now. Euro dollar is another great example. So when I talk about a reversal, guys, you have to understand that the first big candle signifying a solid move, if you can get in on that initial big candle, that might allow you a day or two of additional trading. But so far the day has been dollar weakness. You guys have seen throughout the graphs that I've showed you that the US dollar is losing some strength. So we open up the week into dollar weakness, and if that's going to be the prevailing trade, guys, if that's the prevailing trade, then of course it's US dollar down, US stock markets up. The correlation is reverse and it's direct. So disregard the initial activity in the indicators. Again, we're using relative strength of a period of 7, and because it's more sensitive, it gives us more trading opportunities, but it also means that the price can be out of bounds for a lot longer. There's one more speculative high that I wanted to show you guys. It is Bitcoin. It has been surging like crazy. It's been another parabolic move higher. So remember when I was teaching you guys earlier in the week that a breakout of the level signifies a good time to get in? Again, that is how Bitcoin works. And if you guys haven't seen that video, go ahead and subscribe to the channel and check out our history. Last week there was a video uploaded on the history and trading of Bitcoin. You guys may find some useful, stories or, suggestions to improve your understanding of Bitcoin from that video, so make sure to check it out. We'll leave a link down in the description below. And finally, gold we had a look at, guys. I showed you the situation. I'm worried about it going any more lower, and I want to be out of the trade. But again, this isn't enough conviction for me to get out right now. But definitely Apple, if it goes lower today, I want to be out of it. And I guess last but not least, let's talk about oil. The oil market is definitely showing some more desire to climb, and that's great. Again, how long is this sustainable? How long is a move up only in the last few weeks and maybe last month? Sooner or later, there's going to have to be a rebound, and I guess my recommendation would be to hold that rebound up until this convergence of moving averages. Again, we have the OPEC meeting coming up. I believe it's next week. That is definitely going to give some insight into what the plans for January are. Remember that Saudi Arabia and Russia have promised to cut back some oil production, or at least monitor in order to increase the price of oil, because that is the plan there. All right, you guys, I hope this game plan for the week gives you guys some ideas. I hope you make some nice trades. The dynamics of the market right now are indecision, but again, we see from the US dollar signaling that, hey, the start of the day so far is bearish, and that has a reverse correlation to the US markets. Joe Biden won, but the scheme and plotting of Donald Trump continues in terms of the US election. On December 8th is the final cutoff point to receive all of the outstanding votes or court decisions that are now turning over the previous results. Again, that probably is not going to be the case. The results are counted, results are in January when the Senate votes. Then we'll have the final word, the final say, and the new president, Mr. Joe Biden, will be sworn into office. All right, guys, my name is Yaroslav Burchenko. Together with the Limb Trade, we wish you guys good luck trading out there, and see you guys next time.